Good afternoon, everyone. My name is Chris Cooper, known as the Channel Guy Trader, and I'm reporting to you live from Wall Street Trading's Miami office down in sunny South Florida. Today's date is Thursday, May the 30th, 2013, and here is today's After the Bell Market Summary brought to you by WallStreetTrading.com. Want to first off by taking a look to see how the indices closed the session out here for the day. The Dow Jones closed up a little over 21 and a half points. The Nasdaq closed up a little over 23 and a half points, and the S&P 500 closed up a little over 6 points. If we take a look at the market breadth, we had 3,945 issues advancing on the NYSE, Nasdaq, and the AMEX. We had 2,159 issues declining on the NYSE, Nasdaq, and the AMEX. So therefore, breadth was in favor of the bulls, close to a 2-to-1 ratio there. So let's go ahead and break down the charts here, starting off with the SPY, which is the S&P 500 ETF. As you guys know, we were able to hold this 164 level today. We actually had a little slight gap down, but then we rallied all the way up above yesterday's highs, and then we rallied above Tuesday's highs, and we kind of stopped right in the middle of Tuesday's price action bar there. We did have some little selling pressure that came in on the ES at the close, or you could say the market S&P 500. If you take a look at that action that we had on the ES, which is what we use to track our equity trades or to track the market intraday to use our equity trades, we had this nice upward channel that developed here around 11 o'clock. That was actually holding for the majority of the day. And then once we broke below that trend line and took out this little pivot low, we actually had that nice little selling pressure that took place in the market, which we got our traders short at 1658. And of course, if you're in the My Wall Street TV live intraday trading room that we have, you would have been able to capitalize on that action to the short side in the last hour of the day there. But in any case, the SPY is still holding above this 164 level. We're still trading in a range between this 164 and 168. And we are trading sideways after breaking this little upward momentum accelerated channel that we have right here. All right, guys? And we got to keep an eye on that 164 level, keep an eye on the 167, 168 level. If we take a look at the triple Qs, which is the NASDAQ 100, they showed some decent strength today. They were up 39 cents, up a little over 0.5%. Again, in the triple Qs, we're going to be watching this key 73 level and this key 74.50 level, and then these 75s. All right, as long as we remain above these 20-day moving averages right here, we should be in good shape. As long as we remain above 73, we should be in good shape. But you can see we're actually trading sideways right now as our short-term moving averages are flattening out here, and we still have that rising 20-day moving average underneath the price action to support us there. If we take a look at the IWM, which showed some relative weakness to the other indices on an intraday basis here, they did manage to close higher. All right, and this right here is kind of forming a nice little, I would say like a nice little pennant action going on here. All right, which ways it's going to break, I don't know. At the same time, it is still in a range, but we do have this little range to work off of between call it 150 and 96.50, and then we have this little pennant action that's trying to form right here as we have this volatility starting to pick up in the market, which is pretty good if you're active traders like we are over here. So let's go and take a look at the currency action. Today we had the dollar, which was weak today, and we had some strength in the euro. The dollar index futures did break below that high base. I discussed yesterday that if the dollar futures were to break below this high base, a little consolidation flag action that we had going on here from the move up, we could see a pullback right back down. This did allow for a bid in the commodity stocks. The precious metals were up today, and we'll take a look at those gold miners and some of those and the silver and the gold here shortly. But this did allow for some bounce action in the precious metals. But as far as the regular basic material commodities go, the basic material commodities were weak today. Energy stocks were weak today as crude oil sold off a bit, but did make a nice recovery off the lows, which again we'll take a look at that as well. But we did see some strength in the precious metals. So the dollar is weak today. The euro did have a nice little bounce today. It was able to claw its way back above that key 130 level that we've been tracking. All right, and as long as we hold back above this 130 area, we can get a nice trade back up towards these upper levels, 132. And of course, again, we're watching this currency action to see how it relates to the equities, and to see what type of correlations and divergences that we have with the currencies and the equities, and like we've been doing for the past year or so plus. So euros strong, dollars weak today. Again, that dollar weakness did allow for a bounce in the commodities stocks, well, at least some of them, not the basic materials, but the precious metals. You take a look at the GLD. The GLD gapped up today. Not much opportunity on a intraday basis for a trade, but if you were long this thing overnight, you woke up feeling pretty good about yourself and your account, so that worked out pretty well for you guys over there. A little weird candlestick here, a nice little doji. If we break over today's highs, or I would say if we break over 137.44 or so, which is a key line that I have marked on this chart, we could get a move back up here towards 139.74. Taking a look at the gold miners, which got a nice little bounce today, which I was telling you guys yesterday in the video that if anything you want to be long the gold miners, and it looks like I was correct on that idea. We made this little pivot low right here. I'm sorry, we have this little pivot low, this high, then we had this little lower pivot high from this high, lower pivot low from this low. But then right here we see it. We saw a little change in characteristic of this trend here. We made another pivot high right here. This is the main pivot high that I want to refer to right here. And we broke this little downtrend line yesterday, and then that allowed us to gap above these moving averages today with the gold strength and make a nice little move up. The gold miners breaking over 30 like they did today and closing above 30, and then breaking over this 31 area will be pretty good. All right, so we'll be taking a nice little look at some of those gold miners here shortly. Matter of fact, since we're on the topic, let's go ahead and take a look at them right now. Starting off with Newmont Mining, which was pretty strong today. Newmont Mining was up 3.75%. It's still holding below these declining moving averages here. You can see the stock has not been able to break above this declining 50-day moving average since the start of the year, since January. And then now we have an opportunity to break past it. You can draw this little downward trend line right here. And you can see we broke that nice little downward channel action. As long as we hold above 32, if we could break above these moving averages, we can actually get some nice traction. The next level of resistance that you want to watch is going to be right here at this little gap fill area, which happens to be around, let's see here, which happens to be around 32.66. All right, actually, sorry about that. Next resistance level you want to watch is 35 from, of course, that 50-day moving average that I just talked about. And then the gap fill area right here at 36.32. You can take a look at GG as well. GG is another name that people usually rush to when they're looking to get some action in the gold miners. GG had a nice little move up. Pattern that you see here is a little up move, down move, a higher pivot low. All right, probably a little change in trend there, and we had a nice little move up today. Definitely looks like it has some more upside action to it. I would say if this thing catches some legs, you want to watch out for this little range right here that we discussed back here in February, or I would say April, early April, before it broke down. And I'll go ahead and highlight this range for you guys right now, so you can keep track on this here, and you can see. So usually what happens when you get a breakdown out of a range, usually somehow or some way, usually go back and back check the level, and then you know they either break it through the range or we back test, maybe do a little flash through and then form some type of inverted hammer and then move that back down. You know, if GG gets back above 32, that would be a good sign for the gold mining sector, and then of course we'll measure that strength in GG versus the other gold miners. So keep that one on watch as well. We saw some strength in copper and silver today as well, but we did see some nice action in FCX. FCX was up 2.5%, up 79 cents. This one looks pretty good because it's back above that key 31 level. And as long as we can hold above 31, this thing can maybe make some action back up here towards 33. All right. What else? Let's go ahead and take a look at silver. The SLV, which is a silver ETF, closed up 27 cents. I don't like silver as much as I like gold, but this one could definitely get some catch-up action if the other precious metals start to rally. So keep an eye on the SLV. I'm not going to go over any silver stocks because I would look at the gold miners first. What else here? Let's go ahead and take a look at crude oil. We're going to look at crude oil futures instead of the USO, which is a crude oil ETF, because we get the 24 action, price action on the chart here. And you can see crude oil was able to get back and above this key 92 level. If you guys recall, for the past 2 weeks or so, we've been seeing these big buyers come down on crude oil. Every time it goes to 92, we have these big buyers come in. So today, they actually picked it up for a bargain price because it went below 92 again. They scooped it up. And at the same time, anybody that was long crude oil with a stop underneath these two lows, they got stopped out if they had a tight stop. and now it closed back up. So if we get a break over today's highs and we get back above 94, that would be pretty good because this will be a little shakeout to shake out these people that had these tight stops. And if we get back over 95, that should definitely give us a nice little fast reaction to a move to go back up towards 97. All right, but we are starting to establish a range here between $97 a barrel and 92. Obviously, if crude oil breaks out, that would not be good for us consumers, as we will be losing some of our discretionary income, the same type of income you guys use to go buy your Starbucks coffee or your new Nike shoes. You guys are going to be putting that into the gas tank now. So some energy stocks that were strong today, well, none of them were strong. As you guys know, we have been tracking this CHK, all right, which gave some good intraday opportunities today to buy the dip. Take a look at the 5-minute chart. Some of the traders in the office were paying attention to this one. Gave you a couple times to buy a dip and actually traded in a nice range here. So if you're a big fan of trading ranges, you could have been all over this today. And then again, if you've been watching our videos, you guys know that this stock has some type of underlying bid in it where there's some buyers interested in the stock now, so they are buying the dips in that stock. But aside from that, a lot of the energy stocks were weak today. We did see some strength in this little MUR stock, which is Murphy Oil. This one looks pretty good. All right, keep it on. This one looks like it's going to be a breakout over 65, or better yet, 65.70. The strongest sector that I have to make sure I touch base on before I close this video out here is the financials. Goldman Sachs, ever since it broke this nice little downward channel that we highlighted to you guys about 2 weeks ago, all right, this thing has been on a tear. All the dips are getting bought. Every time the market gap's down, the financials are getting bought. And you can see it broke this little pivot high right here, so it actually made another pivot high, and it's kind of stair-stepping its way higher. One thing that I hear them talking about is the fact that the banks are going to be able to get some more capital because rates, if rates start to creep up, which the bonds are breaking down, if the bonds break down, you guys know in Finance 101, bonds go down, rates go up, and that would help them out because then maybe people that, people looking to put some money to work will start putting their money into CDs and stuff like that, as those rates should go up on the CDs. But either way, the main thing that I want to bring to you guys' attention is the financials are strong. Goldman Sachs, BAC is very strong. One of the stronger banks out there today was up to a little over 2.5%. Actually broke above this. Let's see here. Broke above this key 1360 level after trading this little range right here. So if we hold above 1360 tomorrow, or any dips that stay above this 1360 should be bought. I have a friend that's actually buying BAC after hours because he feels confident that the stock's going to be above $14 tomorrow, which it very well could be because the market looks like it's pretty strong. I mean, if the financials don't go down when the market sells off, or every time the market gaps down from overnight or something like that, and the financials gap down and hold up, I mean, that's a positive sign. Matter of fact, since I talked about those bonds, let's go ahead and take a look at the bond chart because the bonds are still acting pretty weak ever since we talked about that head and shoulders pattern on the weekly chart 2 weeks ago. All right, the bonds have been breaking down, and the real break is going to happen when the bonds break below this 111 area. You got your left shoulder, you have your head, you have your right shoulder, and it's pretty funny because 2 weeks ago we were talking about the bonds breaking down, and nobody was talking about that on CNBC, and now every day somebody's talking about the bond market, about rates going up. And again, we were on top of this 2 weeks ago. And the trade that we gave you guys, for some of you guys that like to delve into the options or the swing trade action, we gave you guys TMV when it was down here at 54.66, and now it's at 58. Not up that much, but again, on Tuesday it did hit $60.25 or so, which, I mean, that's a good return. You could have played that via options, or you could have played that by keeping an eye on the TLT and TMV throughout the session and trying to catch that momentum move when it sets up. For example, like on this day right here, it set up a nice buy when it broke out this little range off that nice move it had off the bottom, and now it's setting up another range. It's actually building a base right here on top of 58. So if it breaks out of this range between 59.50 and 58.26, we should get a nice momentum move up. And I would have to assume that if the market was to make another move higher tomorrow and the bonds were to sell off, this could possibly happen tomorrow. So keep an eye on the TLT and keep an eye on the TMV. So aside from that, main thing here, we did see some strength in some of the technology stocks. All right, the financials are the strongest stocks out there. The insurance stocks were pretty strong today as well. AIG is a stock that we'll be watching tomorrow for a breakout over this 48.25 level, one of the strongest stocks in the market. You can see it's pretty much been establishing a range here between 46.25 or so and 43.25. Keep an eye on this one for tomorrow. Um, MetLife is another strong insurance stock out there. Not as strong. Well, actually, it's pretty strong up there on the list with the AIG as well. So insurance stocks are in play. Pretty much the whole financial sector, guys, is in play. All right. Real quick, let's touch base on some technology stocks. Goldman Sachs came out today and upgraded the solar stocks. So FSLR was another stock that we were able to play today. On an intraday basis, we were not able to catch this move out of the gate right there on the open. All right, but let me put the pre-market information on here. This is the pre-market. We were not able to catch the move off of the open, but we did catch this entry right here around 55.65 and rode it all the way up to 56.20. That was a good trade right there. So again, if you want to participate in some of these trades with us, you could go to our intraday live trading room, mywallstreettv.com. And if you're interested in trading with our prop firm, you can contact me at ccooper@wallstreettrading.com. All right, folks, I'm out of here. Make sure you follow us on Facebook at Wall Street Trading. Have a good night. Cheers.